Yo, investing family, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels, right? Now, today what we're actually going to be touching bases on is we're actually going to be going over how to use the Fibonacci retracement tool. So a lot of you guys, whenever you're trying to identify the trend of a market and you want to be able to know where to be able to get in on the pullback to continue taking it in that direction, this is going to be that tool that you're going to be able to utilize, and it's going to be something that anybody can use from beginner all the way to advanced. So I'm going to show you guys exactly how to be able to use it based off of some of my personal preferences and some of the ways that other traders use it. And I hope you guys take value from this video. Catch you on the next clip. Peace. Yo, everybody, back at it once again. Favorite entrepreneur. Let me go ahead and adjust my face. Your boy, official Tyree Samuels, right? So before y'all go any further, make sure y'all please go ahead and subscribe to your boy's YouTube channel, because every single time I drop a video, I don't want y'all to have to wait. I want y'all to be the first ones to see it before everybody else. So today we're actually going to be touching bases on how you're going to be able to start looking for some setups using one of the most, if not the most popular utilized tool in the trading market, which is going to be the Fibonacci. It has nothing to do with Forex. You use it for stocks, you use it for cryptos, commodities, so on and so forth. So the Fibonacci retracement tool is going to be indicative, right? I think y'all might like that word, right?
I don't know what those words mean.
Indicative for utilizing whenever you feel like the market is going to have a continuation. Now, before it continues, it's going to have to do something that's called a pullback. So a pullback means that the market is going to correct, right? What goes up must come down before it continues. So it's not a guessing game. You want to be able to pick a good spot where you think the market is going to retrace to, so that you're actually going to be able to, take advantage of the full opportunity. So the thing that I actually want to go over today is, how are you guys going to be able to utilize the Fibonacci tool properly? So one thing I want to be able to actually show you guys is, what does it look like when a market is trending? Okay. So if I were to take this drawing tool, if we are looking at a downtrend, right, we're going to have the market drop, pull back, drop, pull back, drop, pull back, drop. Okay. Now, the thing that I want y'all to be able to understand is this is obviously a downtrend. Okay. So on a downtrend, the way that we would be using our Fibonacci is going to be a little bit different than how we would use it on the uptrend. So if we're looking at an uptrend, right, pull back, go higher, pull back, go higher, pull back, go higher. Okay. Now, not the prettiest downtrend and uptrend, but downtrend and uptrend nonetheless. So that's going to be a downtrend. And then obviously, as I mentioned over here, this is going to be an uptrend. Okay. So the thing that you guys now want to be able to figure out is, how the hell do you use the Fibonacci tool properly? So an uptrend, we know, is going to start obviously from down here, right? And a downtrend is obviously going to start from up here at the top. Okay. So now what we want to do is, we want to be able to take our Fibonacci tool. So if you guys go look at the video that I actually have titled "How to Use TradingView," I'm going to link that up here at the top. I actually show you guys how to use a lot of these tools and how to find them. But specifically for the Fibonacci, you're actually going to go and hover over this spot right here. And the actual first selection is going to say Fib retracement. Okay. So if you actually click on the Fib retracement, what I'm actually going to do for you guys is, I want you guys to be able to look at my settings wheel. Okay. And I want you to go ahead and get a screenshot of what you currently see. Now, different people use different Fibonacci settings. So it's not technically like it's just a one-way size fits all, right? Some people are going to use Fibonacci retracements that I don't. So example, some people will use the 23.6, right? I'll make that white. Some people may use the 50%. Some people may also use the 38 point, I think it's the 38.2. I personally don't use these Fib retracements, okay? It doesn't mean they're wrong. It doesn't mean I'm right. It just means that this is my personal preference. So these are going to be the Fib settings that I personally use. Take a screenshot, pause the video, take advantage of that. Now, the way that we're actually going to utilize this is, if we actually look at a Fibonacci tool, I want to be able to break down how exactly this works and what it means, okay? Now, I want you to think about this, right? I want you to ask yourself a question. If you go to the store, right, grocery store, Walmart, Walgreens, CVS, and you know that there's a possibility for something that's going to be going on sale. They're like, hey, the sale for this starts tomorrow. Are you going to buy it today at regular price, or are you going to wait until tomorrow whenever it's discounted? You're obviously going to wait until it's discounted. The market operates the same way. So in a sense, you're looking at this Fibonacci as discounted areas. What do I mean by that? Okay. So you can look at this as a 61% discount. This will be a 71%. This will be a 78%. This will be an 88% discount. You really don't want to get 100% discount because that means it's free. And obviously we know the market, nothing is free. Okay. So the way that you guys really want to utilize this is you're looking at these numbers as far as these are discounted areas. So I want to be able to look to get a discount anywhere from 61 to 88% off. And that's where I want to be able to see the market come back to before I continue taking it in whatever given direction that I see that it's going to go. So the next thing you guys want to focus on is targets. Okay. So the targets, you're going to have 3 different targets when you're trading with a Fibonacci. You're going to have the 0, you're going to have the negative 27, and you're going to have the negative 61.8. The negative 27 and 61.8 are going to be called extension. So an extension is you expecting the market to extend further in that direction. Okay. So now that you guys know the targets, you guys know where you would like to see the market retrace to. We're now going to go put this on our chart so that we can see exactly what this looks like. So let me show you real quick, right? So if I were to take this fib and I were to take it from the high, right? If we're selling it, we want to take it from the previous highest point, and then we want to bring it down to the low that was created. So the way the fib works is you want to be able to see the market give an impulse in a direction. You want to see it create a floor or a ceiling, and then you want to see it start retracing. Whenever it's created that floor or ceiling and starts retracing, that's whenever you can honestly pull out your fib. So as you guys can see, pretty much as I identified, what we want to see is we want to see the retracement happen somewhere between 61 and 88 percent off. And that's basically how we're visualizing it. It's going to be a percentage off. Okay. So notice how the market comes within that area and then it continues selling off. It actually ends up dropping and hitting our negative 27% extension before it continues, right? So that's going to be the example of a sell. Now for a buy, you would simply take it from the low. You would bring it up to the high. Okay. Now remember, for a buy, you want to create it. You want it to create a roof. Okay. Whenever it creates a ceiling, that's whenever it's going to start retracing. Now from this retracement, it's going to be the same thing. You would like to see it retrace somewhere between the 61.8 and the 88.6. And as you can see, it actually looks like it hit the 78.6 spot on before it actually continued and actually obliterated the 61.8. Now, obviously, this is what I manually drew on the chart. So it's not going to be the same concept as a real life market. So what we're about to do is we're about to go look at a real life market. Okay. We are about to go look at a real life market. So the thing I really want you guys to be able to focus on is going to be this. Okay. I'm going to show you guys an example of a selling scenario. Okay. Then I'm going to show you guys the example of a buying scenario. So let me show you real quick. So remember, with a sell, okay, what we want to identify is this is going to be the top, right? This is the market extending. This is the floor. This is the market pulling back. Okay. Now, since I've broken all that down, I'm going to erase this, right? And now I'm going to pull out my fib. So I'm going to take my fib from the highest point before the market created the impulse move. So if I've dragged my fib down to where this market created this floor, okay, I can then pull this over to the left. And what I want to see is I want to see, did the market give us a retracement somewhere between the 61.8 and the 88.6? And as you guys can see, it actually happened right in this area. And what did the market proceed to do? As you guys can see, the market continued to drop, and it actually ended up violating the 0%, the negative 27, and then finally all the way over here, the 61.8. Okay. So that's going to be an example of a selling scenario using the Fibonacci retracement tool. Okay. So now what I want to be able to show you guys is an example for a buy. Okay. So as you guys can actually see over here, this is an example of a trade that I actually marked up ahead of time to be able to show you guys what it would actually look like. So if I actually take my fib, I pull it from the low. Okay. So let's go over this one more time. So remember, this is where the market created a low before it impulsed up, right? It created the ceiling. before it started giving the retracement. So now what we want to be able to do is we want to be able to identify, okay, let me take my fib from the low. Let me bring it up to the highest point before it created the ceiling, like so. Okay. And then from here, right, what do I want to be able to see happen? What I want to see happen is a retracement somewhere between the 61.8 and the 88.6. And as you guys can see, we actually got that reaction. Now, the market is still doing what it's doing. So in certain situations, right, maybe the market doesn't extend all the way up here. Maybe the market just continues dropping. Now, what we want to be able to see is obviously now we want to be able to see the market come take out the 0. We want to see it come take out the -27. We also want to finally see it take out the -61.8. And ladies and gentlemen, this is actually how you're going to be able to use the Fibonacci tool. And what you want to be able to do is you want to go to a chart and just start practicing different situations. So I'll do one more situation. And let's just say, okay, let's just say right here, right? Let's just say the market created this, okay? It gave the impulse move, created a floor, and then this is where it started retracing before it continued to drop. So what I'm going to do is I'm going to take my fib from the high, right? I'm going to pull it all the way down to the low, okay? And then I want to see, did the market give me a retracement in this area? Now, depending on the kind of trader that you are, you may have passed this up, you may have taken it. For me, I don't want it to come close. I actually want it to like get in that area. So since it did not get in that area, I personally would have passed up the trade setup. But for some of you, right, some of you may not be like me. Some of you may start using the 50% Fibonacci retracement, right? I don't use it, but some of you may. So if you do decide to use it, because I don't want to force my way of trading on you because your trading may not be successful imitating me, right? If you decide to use the 50%, then yeah, in that situation, this would have given you the ability to be able to look for a possible opportunity to take this trade. Now, with that being said, I've literally shown you guys how to be able to use the Fibonacci retracement tool. I've given you guys some, some dope examples. And what I would like you guys to be able to do is if you guys appreciate this video, you guys like this video is going to help you out in the future. What I would like to see is, let me get you guys to go ahead and hit that subscribe button because I want you guys to be able to stay up to date with every single notification, every single time it drops, because I want you guys to be the first ones to get it, right? Next thing I would like from you guys to be able to do is please like, comment, share this video to anybody that needs help, anybody that doesn't know what a Fibonacci is, because it's definitely going to help them go to the next level. And then finally, one more again is if I had a twin. Let me get y'all to go ahead and follow your boy on Instagram, official Tyree Samuels, official Tyree Samuels, right? And as usual, I'm going to see you guys at the top, not from the top, because the bottom is way too crowded. See you wouldn't want to be here. Peace.